Good morning and welcome to the VSA Morning Miner. It's Friday the 21st of February and I'm joined by Paul Rankin. Paul, how are you today?
Pretty well, thank you. Pretty well, and very mild apparently as well outdoors. Though a little bit of rain, I guess.
Yeah, it is. It's a lot warmer than the start of the week, but we've got some cold coming up next week with -9 at the moment in Toronto. Let's start with news from some of the bigger companies. There's quite a few precious metals earnings results, but the big one yesterday was Newmont.
Yes, that's right. They beat their analyst estimates there on the announcement yesterday for fourth quarter profit. And due to a gold production increase of 9.2% year on year to 1.9 million ounces, and the price received for that gold was up by 32% on a year on year basis. All in sustaining costs. We're down just a little bit at 1.5% to $1,463 per ounce, but given the 9% increase in gold output, I would have maybe hoped for a little bit better performance in that category there. Gold production now expected for the year for Newmont to be just above the price or the prior Wall Street consensus at 5.9 million ounces at this point. And adjusted basis, Newmont earned $1.40 per share in the quarter, which is significantly better than what analysts were expecting. So, in that regard, I would say they're doing pretty well, as analysts otherwise have to rejig their outlook for Newmont going forward at these high prices.
Yeah, it just shows you what jumping commodity price and hitting your production increases can do for earnings, because at the end of Q3 production, I think had been slight disappointment, and rising costs were a big concern, and that's probably the key reason why share price has actually underperformed the gold price over the last couple of months. The gold price itself dropped a little at the end of Q3, the start of Q4, and that was the high point for the Newmont share price. Obviously, gold price has now gone on to make new highs, but Newmont's still lagging that September, October high. But this outperformance just reported could help it catch up. Paul, we've also got news out, I think, from Gold Road.
Yes, that's right. Gold Road, the Australian gold producer in joint venture with Goldfields there in Australia. They had a record results out in their Q4 and full year numbers. And I think even better than perhaps what they had expected. Record revenue, $528 million. That's up by a good $50 million from what 2023 was. Full unhedged gold sales at 143,800 ounces, though, were down by about 20,000 ounces. And the realized gold price, though, was up by $700 Australian per ounce at $3,672. So we had record EBITDA there for $294 million, basic earnings per share 13.17 cents. Ended the year with cash balance and short-term deposits $166 million and a cash dividend of $13.48 million there. Financial assets with a fair value $741 million at the end of the calendar year last year. Final dividend was 1.5 cents, and on top of the interim dividend of a half a cent. So looking very strong there as far as the current environment, and very steady at this point as well. They did add to reserves at Gruyere, as well as a project they called the Yamarna Mine Readiness Project. So that added at least a year to the production life in the operations there.
Yeah, I mean, again, with the gold price, we should be seeing a lot more record earnings results like this over the next month or so. Sticking with gold, there's also an announcement from Tucano.
Yes, Tucano, a private firm, bringing back the large Mina Tucano gold operation back from what was on care and maintenance to full production. They have received financial backing in the form of Canadian $98 million from an unnamed private equity group. And that was an initial proposal of 46 million. So you look at double the value the private equity group are willing to put into gold since the time that the negotiations began, and obviously influenced, I would say, by the sharp move higher in recent weeks with the gold price. First tranche of 49 million payable on execution of the final agreements, and the second tranche will come 120 days after that. And this makes sure that the mine doesn't just produce from what is historic tails and what had been unprocessed stockpiles, and actually gets back into full operation again. It's a big facility, 3.5 million tons per annum. So if it was tried to be built today, it would probably cost around $600 million Canadian to build. And they're looking to try to get this geared back to a circa 200,000 ounces per year operation. So definitely not a small one that Tucano bringing on.
Very good. And just a technical update from cleantech lithium extending the deadlines for their broker option and retail offer to the 10th of March and 20th of March. Sorry, those are the results. The extension is to the 7th of March,
Right.
and then they'll close.
And that's it on intended that portion there on the broker options, not to exceed 2 million sterling, it says.
Yeah. All right, Paul. Thanks very much, and have a good weekend.
Very good. See you later.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.